Okay, day Monday, date 12th June, day name trading range bullish channel. Okay, now we go for weekly, daily, hourly chart. Okay, so today is Monday, first day of week. So last week is sellers kept down from high. Last 2 days, Thursday and Fridays are red candles. So week candle is like this. So days range will become very small. So it is the approach. Okay. Here daily candle, as we can see, Thursday is red candle, Friday is red candle. So we consider it as a small pullback or flag in bull channel. Bull channel is up to this. Now this is a flag pattern. So from daily candle we can see that there is probable move of 2 legs. So consider it as a spike, full body candle, red candle. So there is probability of pullback in smaller time frame. Here consider as a spike, and nearest support of moving average is around 1800, 18,465. Okay. This is hourly chart analysis. Hourly candle, uh, where you can see that this is spike. Thursday downfall in second half. Friday through update selling in channel and both side trading as well. Okay. Now today in hourly candle it broke the trend line. So probability of pullback and two-legged move for bull buying pressure. Okay. So there is chances of next days of second layer, but if gap up is opening, so today gap up open, so chances of bull channel or two-legged move for pullback we can consider that. Okay. Let's go for overall view of today's. So this is chart with number. Okay. So why I consider bullish day, trading range bullish day. So we can see that from starting of the day there is two-sided move is seen, observed, like from days selling pressure continue, from days low to high, three consecutive green candles are there, and again micro channel is building up. So we consider it as a after long selling it is pullback for two-legged move of buyers or bull channel. Okay. Now today's approach is from first half or first several hours, we can see that there is two-sided move can be catch. Like from here, bull channel is created. From top of the day, there is micro bear channel are there. Now again, bull channel is created. Here is the concept of managing trade. How to manage trade is key point for today's. How to manage means you can enter in any point of the day, any candle of the day, and just manage well. And by scale in approach, you stays in position profitable or break even point. So how? Let's take example. After saying this, let's see someone said after 11th candle sold here. Okay, so if you sold here, if select position is created here, so after seeing this candle, this green candle, this green candle, what we can do is wait for red candle. If you exit at this point, it is best approach for this trade. Exit. Why? Because we will see that in next analysis that this is a wedge pattern where first, second, and third push are there. So probability of down is higher at 11 candle. Let's say if you are not exited, it is one of the way, one of the managing trade approach. So how? Let's say you sold here, so you see red consecutive bars. So what you do, you enter again scaling approach after one red candle. This is 17th candle. Let's say you entered here. Okay, so around 19th candle, you have to exit it, break even overall position. You sold here, again sold here, and manage exit here. Okay, this is one of approach, very risky approach. You have to exit anywhere here if you traded this. Okay, another approach is for, let's say you bought here at top of the trading range day. Now you see consecutive selling bars, consecutive bars. At 40th candle, what you observe is there is green candle, which is green candle. Let's say where you bought here scaling approach, you bought here another lot. So how you manage trade is very important. You entered here, exit around 49th, 50th position, or you waited here till moving just scale trailing stop loss. You exit here, so this position will be exited uh, break even, zero loss, and you make here profit in smaller bull channel. So it is scaling approach. Here you very well or do not just buy and hold in always in approach. So you make profit in here. You can buy here as well. You can sell here as well. This is two candle. So let's say you bought here just small lot. And you after that you scaled in. So you exit around here. So this is two-sided move. So here fading fade fade is important here. Why fade? Because every move you see, it is faded. How faded? Let's look at this. Green candle, breakout chances, and sellers have faded here. Now sellers, green candle, buyers have faded here. Same again here. So this is faded approach. Here red candle, one, two, three pushes are there, and green candle, which is sellers, all legs are faded here. Now buyers can in for two legs approach or more than two leg, which is channel approach. Okay. Now let's consider candlestick patterns. Every candlestick. So this is day structure. We will discuss it. Okay. Now let's say okay, first candle where you can see it is actually in trading views candle is like that, and in fires all other performers different candle where uh, they have here is weak and body is only 30%, but here trading view shows full body. Okay, let's consider it as a gap up, and after gap up there is full red candle with body, with dominant body. Okay. Now after that second candle is a bullish candle. What opening reversal trade is to be taken at second close, which is buy position. So buy position, there is again fourth candle which is dominant tail. So two-sided trading is going on, and there is fourth candle which is doji candle. So who have bought second close, now will exit. As you can see on fifth candle of tail of upside, they have exited. Why to exit? Because fourth candle is doji candle. So both confusion mode, both buyers and sellers have confusion mode. Red candle, which is big candle, fifth candle, where new position can be created for sell. Now after fifth candle, those are the buyers and not exited. Now they will try to exit or just managing trade by next candle follow through. They will look for follow through. Big red candle is fifth. Now they will wait. If the candle is not going below, then they have to wait. Buyers will wait. Sixth candle where buyers have only 40% body. They tried with 40% body, where it is seen that sellers have in this area, sellers are active, sellers selling orders. Now buyers have only chance to just put limit order around here, what sum of quantities here and exiting here like this. Okay, so you have to exit, you have to very fast to trade like this. This is not considerable. You can exit here, find new opportunity. That is the option, best option is that. But if you have idea that day is like that, not a good range, not a big range, because you can see that days the total range is around 55 points, 60 points. So what you can capture here is 30 point is max. 30 40 point, great. There are here opportunities are there where you can capture. Let's say you bought here 42 points captured. Okay, there are here as well. Selling position can be created, 23 point can be captured. This is a days range where buying and selling individual channels are going on. Let's say you bought account here. There is 30 point channel of bull for 2 leg candle. Now let's back to fifth candle. Okay. So what if you have created position here for follow through, and follow through is not great for sellers. They are still in disappointed. Okay, now it seventh candle is do sort of doji candle. Buyers can't take up prices. On eighth candle, lot of sell buyers are exited and new selling position are created. Here, easily position can be created by sellers. On eighth candle of wick. On eighth candle selling position can be created. Ninth candle. Okay, now what happens is here you can see that there is here is one leg, this is second leg, this is third leg. Ninth candle is second leg, 11th candle is third leg. What you can do is, after seeing this, let's say you position created here, you sold here, now you have to exit here. This is because 11th candle is sign that 11th candle is sign that there is 50% chances of going up and down. Okay, only 50% chance. So after seeing 12th, if your position is negligible loss or smaller loss, so you have to exit anyway. Now 12th candle is very important. Why? You say this is 6 to 7. Okay. Okay. This way. This is wedge. What happened after wedge is wedge where first candle is have dominant body, and after that the pressure is consecutively goes low like that. Here not able to break below days low or first dominant spike. Okay, so what you can do, you can trade for fetch breakout, which is normally on opposite side of trade. Okay, after seeing this green candle, there is who have sold here is are in loss. If I traded it, I will exit it here and go long for here. This is wedge pattern. We will in further videos will find everyday structure wedge pattern and we will trade it. Wedge have normally 30% chances because it's trading range type. So we how we approach? We approach by pushes down and breakout, normally wedge breakout. So we will consider it. Okay. So let's say you buy close on 12th candle. Okay, 12th green candle. Now there is 13th candle which is very big green candle. So now all the sellers who have sold on 11th candle, now they have to exit. Or if they hold, they created, many smart traders created new position at 12th, which is buying position. 14th candle, which is also bullish candle, buy on close. 16th candle, where 50% body is there. So many of the traders, buying traders, are exited at top of the 15th candle. Let's say again, which is chances of going high. So 15 is buy on close, 60 is buy on close, and after 17th candle you have to move just sell. So why? Because it is selling indication. So if sellers got follow through, then it will chances of going creating small lag of sellers. So here we can see that after 17th candle there is weak red candle which is dominant candle. Okay, so 18th candle. Let's discuss little bit till 18th candle. What you can see till 18 is that if you sold here, exit at tier 12th candle, it is the best decision to take. Buy on the 12th, or you can, if you have added here by taking SL of the low of the day, then there is a chance after seeing this red candle there is chances of uh, this is first leg. Okay, there is chances of second leg of this bullish channel will continue. Okay, consider it. So what you can do is after ninth candle move your SL to here or 50% of here and staying always in approach. What are the chances after red candle is set? Probably second leg will up, or here after this size of channel will continue. So as you can see after 19th candle a channel is created of this size. Okay, two approaches are there. Either second link will be created or channel will be created. Okay, I bought around close of 19th candle and hold it till 20th candle, 26th candle, assuming that second leg is over. But this 26th candle and 28th candle, it is observing that it is channel, bullish channel is created here. Now in this area no selling position can be will be created. I will tell you later. But approach is for if you bought here or bought here, you just move SL to low of the 13th candle and wait. So as we can see that if you bought here after 13th close, so your profit risk is to be 1 trade to 1, so you can exit here. This is the best trade to be taken. Okay, now what will sellers do in this channel of 18 to 34 point? Let's say if you seen 18th and you sold 18th close, you are not participant this 12 to 17 candle, you sold 18th candle. After saying this, what you will do, you just wait for next red candle which is 25 candle, enter on close of 25, can see yes, okay, and exit at 27 close. This is the best idea to approach to avoid any loss. What if you sold 25th candle, fresh position is created. Let's say you entered here, okay, on 25 close, you waited that whenever exhaustion move of this channel will occur and you scaling, or you consider it as a channel, not go far away and it will return. So 33 candle, which is big green candle, which can be considered for exhaustion move of buyer's channel. So what you do, you buy on, sell on close. If not, well, sell on 34th close. What will seller do is sell on 34th close by scaling in approach after 25th selling position. If you sold 32, you add position here or just move SL to here. Now sellers have SL up to this point. There is good move of 30 point, and what happened here is price came to midpoint of the day here. There is a bull channel where around 30-40 point, and now 30 point selling pressure is seen and price came to midpoint of the day. Now this type of day is normally two-sided day. So what will they will try to do is buyers and sellers, they will find for best two-legged move. Okay. At midpoint of the day, let's say you trader wage well. So what happen is here, this is probably first move we can consider, first leg. Now there is pullback, so chances of second leg is very high. So here after 40th candle, let's say sellers have sold here and this is 40th candle, they all exited on 40th candle. Why? Because they see that green candle is closes on previous candle's high. Okay, so previous candle is red candle, so they closes on high. So what will buyers will do is buyers create a new position. If sellers is not exited on 40th position, 40th candle, they will wait and they will see that 42, 43. Then they understood that price is not interested in going down, so they will exit as well. So here 43 candle are there where two-sided moves happen. So sellers will exit and buyers will buy on limit orders. Normally these type of day limit order tradings are easy and can be seen. Okay, after 40th position your SL is to be 39th low, 46 candle buy on close, 47th candle always in approach, stay hold, 48th buy on close, 49th buy on close. You can see that this is bull channel. You just move SL to swing low every swing low, and this channel is tested high of the day, high of the day. And where this candle is shown here is that this is highest candle of this channel, 16 point. So we can consider it as an exhausted move. If not consider, I will show you how to manage trade. But if we consider it, better to exit here. If breakout will happen, we will buy on pushback. This is not breakout type day, not going on this high. So this type of small channel where sellers are also dominant and buying are also dominant. This is pullback channel. So you better to take decision of exiting buying position on 16th 60 candle. Okay. Now what will happen? Now let's say you bought on 60th candle. Why? Because this is bull body candle. You see that 61 candle and 62 candle are selling pressure where buyers have no time to think for exit. For managing trade well, what you can do, you can scaling approach. Let's say you bought here. After seeing green candle, let's say you bought on 64. Why not 63? Because 63 is signal bar. Signal bar says that buy on high and sell on the low. Okay. Now high trade above high is going on 64th candle. 64th candle where traded above high of previous candle. So let's say you in here. This is after 2 o'clock. Day is not going like uh, selling here is. This is bull channel. Easy, we can take decision. Your if you approach here, you go for selling approach. Just consider it as a stop loss. 40 30 point stop loss. I understand that, but after seeing this green candle, you just move SL to here. You can exit here, or if you holded it, so from here to you are in profit, exit that leg and you entered here on buying position, which is now at break even, exit here. This is the best idea to do if you not exited on 61st candle and 62 candle, because this is last our move of breaking down. Okay, so two-sided move, you can do that. 62 is red candle. So now let's consider what if you sold below 62. What you can do is wait for this leg to complete, or you can exit on 66 candle, which is better idea. Why? Because three consecutive buying candles are there, green candles are there, so probability of up move is very high because there are trapped buyers as well. And as seen from this candle, there is no type of day that this candle will go down, further go down, or broke this low or broke this low. So chances of closing around here or move both sided trading occur here is high. So if you sold here, if you more sold here, just wait. Considering SL of this, let's say, and this candle, 70th candle, 71 candle, you exit here. This is the best idea to do. This is two-sided move. You can ignore it trading as well. There is very well trades are captured here. This buying pressure, this buying pressure, this selling pressure. Days range is of 55 point. So you can consider it as a uh, one third or one half of rate days range capturing. So 20 to 30 point in capture is great. Fading is also occurring, so you can't hold it for a long time. You just trail your SL. If you move your SL to here, you SL will hit and your buying position created here will exit here. Great. If you sold here, you move your SL to this candle. Why? Because this is buying pressure midpoint of the day. We will take example on midpoint of the day. So 40th candle, exit selling position which is created here, buying position created here, exit on 60. If not exited on 60, move your SL to open of 60, which is traded at 61 candle. Great buying position created. Now consider as a channel and midpoint of the day. Fade wedge pattern and mid of the point of the day. Here what happened is uh, price came to midpoint by sudden spike move. Now this spike came after uh, two 2 hour, almost 2 hour of buying channel, buying pressure. And so what here happen is sellers have spike which is first leg. Now this is considered as a exhausted move. 40 candle where buyers again came. So around 45 candle. This is first leg. 45 candle can be considered. We consider as a second leg. This is pullback of selling pressure, and here what happen is second leg. Now from after completing second leg at midpoint, so further direction of the move we can assume that we will consider on very different charts in future. Let's consider for that in this case. So what can be happen is that after second leg completion we can trade in opposite direction, like we can buy on 46 candle. Okay, so after buying this you just move your SL to 40th low, or and after that 45th low, or you can move to 46 low which is breakout candle, and there is 20 point move is here. So this is also good idea approach for this day. I have uh, described it as well. Always in approach, manage trade by scaling, fading approach, look channel. Here what happened today is that price stays in channel for longer time. Like this is the wedge channel where price stays 1 2 3 4 5 6 almost half an hour stays here. Here also that happen. This is 1 hour where bullish channel so stayed here. This is also happen. So what you can do is you can trade channel as well. How channel? So let's say you bought on breakout candle. Just put your SL here. After considering always in approach or scaling approach, you just trade or manage position in this channel. This channel is 50% of move. This breakout have, let's say, consider it as a 20 point move in this candle. So this channel is same size of that overall channel. So your risk is around one candle. So you will get profit around one candle of the. Also this happen here. This is breakout candle you trade. You just risked it here it point, and you got here it point. In this type of day, put appropriate SL which is around here, around here, around here. So it is the best idea to trade in always in position. Let's say you not exited here, you bought on this green candle. Now what you see is 2 B grade candle. Do not panic, just wait. You see, observe that. You see very next candle is green, so just to move your SL to here. What you do is easy to do is go below this. I will exit all the position or stay, and price stayed above it and just came to where your position is created. So just analyze the day, what will probably happen. So this is the day of that. Okay, one way of trade on structure. Now our idea is to, I will consider two idea. We will find, I will find that idea in all type of day. We will just focus on that and manage well and trade well. Okay. Let's say I consider it as a wage and I consider midday average. This is the price broke down to midday. So we will take a lot of example on midday approach and wage. We will consider, I consider it as a wage approach here. Let's say this is today's chart. There is lot of wage and channels are there. Let's see, orange portion is wage. So how you can trade is after considering one, two, third pushes, you can trade in opposite direction as we can see that, and it is easy to look in live prices. I have seen that. This is 15-minute chart. You can observe it as well. Is there 15-minute red candle? There is no pressure is going on. Three pushes are there. Three candles are there. Almost uh, hour. So what will happen is that it will go opposite direction of the wedge. Your risk is small, very small, but profit is high. But this is 30% probability. Why? Because there is chances of loss is high. But when you are in profit or just breakout happen, so your target is almost 2 to 3 times of your risk. Let's consider it. Let's say you two trades are got SL hit and your SL is just 10 point. Okay, but on third trade, let's say you got the breakout and just move SL to price or break even. So price will go up to 4x and 3x. So let's say 30 or 40 point. So your previous loss will be ignored and you are in new position of 20 point, new profit of 20 point. So chances of wage is here. Channel move same will happen. This is yesterday's chart. Day structure is trading range, bearish channel. Today is bullish channel I consider. Yesterday was bearish channel. So here is also example is this. Let's say you entered here, again enter here, manage trade well, put SL here. Throughout day you can always in approach. Here always in approach is helpful for legged move, not throughout the day. You play throughout the day, just move your SL to major swings. Okay. Now this is channel as well. This is wage, bearish wage. First leg and there is second leg of that. So now if you traded here, you can trade here. What your risk is this, just be part of bullish channel. You can't know that this bullying, well, how much bullying pressure is there. Let's say you bought here, just wait, there is exhaustion move, you sell here. If not, just move by price, break even. Let's say you entered here, just put SL to here. This is minimum profit. After moving price, you can put here because this pullback is not going their way of bull. So wage can be traded like this. This is the one of the example where trade wage happen at starting of the day. Starting of the day, reversal chances are very high. So this approach is very good. Let's say we will take, I will make notes. We will consider it time as well that stays in range, then not able to break. Three pushes are there. Buy on opposite candle. Same here will approach it here. First, second, third high is there. Channel is there. Take opposite trade. But this is not wage. We can see like if we experience that this price will go to till midpoint of the day or check the breakout point of the day. Here is the breakout happen. So price came to break out, retest it. This is the idea to it. You can make position here, you can make position here, you can make as well position on here. This is breakout candle, but you have to manage well. If you sold here and exit on it, it is best idea to do reverse the position. And why reverse the position? You got idea that this is midpoint reversal, midday reversal, and price action will further go on first half, like first half. Okay, here midpoint of the day is considered as a, let's say, wage happen, pullback happen. Now pullback will take prices to the midpoint of the day. This is the key point here. Here what happen is, after red candle there is big green candle which is exhausted move and sellers have faded. This is the we can consider it as a how it moving average. Let's say below moving average there are sellers, and sellers are aggressive, sellers are dominant against bull. At moving average, uh, confusion mode, two-sided move, tried above moving average, they tried to big green candle. What just happened is, here they sellers faded it. What you can do is just buy on, sell on close this red candle, put your SL here, enter. If you have entered here, move your SL to here, just scale in, and you be part of two-legged move of downside or channel for downside. Here two-legged move happen, and selling channel is also observed below moving. Today what happened is that midpoint buying candle, second leg is completed here, which is exhausted, which is in case exhausted move on last day. So what you can do is buy here, or if you have bought here, just move your SL here and trade for channel or trade for second leg till second leg. So first leg, consider it as a second leg. So after midpoint, uh, idea is valid that you can trade it for channel and second move. Yesterday also same, we can trade it for that. Now further what we will do, uh, we consider it as a pullback. What is the structure of pullback and what point we can enter, like we entered here. We will take further mm, cases, charts, where will this happen, because this is 70% of day is like that pullback will happen and price came to midpoint, and we will trade for two-legged move. Now chances are that also is that this channel will move further down. If this green candle is not happen or prices go below that, so chances of further down move is also there. There is fade structure as well, that faded here, green buyers faded here, sellers faded here. Now every breakout will fade. How? This is breakout of today's low, so faded by buyers. Now this is buyers breakout mode, so faded by sellers. If prices stayed here and broke down this candle, so chances are that price reach to low, near low of the day, and again happen that buyers will come and fade it, and prices will go midpoint, mid of the day. So here what just happen is, from midpoint prices go higher. So we will see that in cases, but this is idea to be done, that pullback, uh, stay pullback, um, pull pullback consider or bring prices to the midpoint of the day. Same uh, pullback here is spikes, red spike, and from midpoint there is new bull channel or bearish channel will happen here. Bearish channel happened here, bull channel happened for second leg. So idea can be considered. Here is the same midpoint, midpoint. Okay, thank you.